What's going on, guys? Welcome to another video with me, Said Riaz. So in today's video we're going to talk about the market crash. For the last couple of days the market have been going down. There have been a lot of stocks in the red that has caused a panic between people, which causes even more selling pressure, which causes the stock prices to go even lower and lower because people are selling. So in this video we're going to talk about what to do if a market crash happens, how to be prepared for it, how much cash should you have, what percent of your portfolio should be in cash going through a crash or a pullback or a correction, whatever you want to call it. But before we get started, make sure to smash the like button for the YouTube algorithm so that YouTube can share this video with other people as well, and it would also help my channel a lot, so I'd greatly appreciate it if you do that. And without further ado, let's get started into today's video. Alright, so as I mentioned, we're going to talk about the pullback in the stock market. But before we get started talking about that, let's take a look at this portfolio. This is my portfolio in Robinhood, and see what has happened in the stock market last couple of days or last 10 days or a week or so. So I started this account right after the crash in March because of the COVID-19. So as you can see, I started it basically, the flat line means there's nothing in here. So I started basically May, beginning of May, end of April, around that time. I started this account with a little bit over 14,000. I think it was $14,500 to be exact. And the account went up to crazy amounts. So it was like over $30,000, $30,414. That was February 19, the amount. But because of the last couple of days or the last week or so that the market has been pulling back, this account is down to $28,460. So that's I'm up, still up a crazy amount, 96% in less than like 6 or 7 months. How many months is that? You can do the math yourself. Yeah, so 6-7 months I'm up 96. Actually, that's like 8 months. I'm up 98%, which is crazy, which is great. But I was up over 100%, as you can see, 109.69%, so 110%, but now it's like 96%. So that's like a 10 to 15% pullback, which is a lot in the last week or so. That's a huge amount. Not even it's not like 2-3%. 15% is a huge pullback in such a short amount of time. But it has happened daily, so people don't really notice it, except the last couple of days. People who got stocks like high-tech stocks like Tesla and some other stocks, they have seen even higher pullbacks because Tesla is down, I think, 25% since like a month ago or something. So high-tech stocks have been down even more, specifically Tesla. But my portfolio is down considerable amount, like 12-13%. That's $2,000 because it was 30,400. Now it's 28,400. Yeah, so like $2,000 for a small portfolio like this. It is a lot of money. I do have another portfolio as well in Federal Day Investment, but this is the one that I show in public. These are not the stocks I own, by the way. These are my watch list. The stocks I own is up here. I'm not going to show you that yet, but another video is coming that I'll show you all the stocks I own, so stay tuned for that. But anyways, let's talk about why the stock market is going down, what you should do, how to be prepared for it, how much cash should you have, or how much I will have. Alright, so the first thing I want to talk about is, will there be like a 50-60% or even like a 40% crash in the market like we saw in March of this year or last year because of COVID? And the answer, in my opinion, is no. The reason for that is because there has been a lot of money pumped into this economy. A lot of people think this is a bubbly market, which looks like it, but also there isn't a chance, in my opinion, of a 50% crash. And the main reason is because there's been a lot of money pumped into this economy, and more is coming. As you all know, there is another stimulus package that Joe Biden is trying to pass, and that's another $2 trillion. It's $1.9 trillion to be exact, and that's a lot of money. It includes another $1,400 stimulus checks, which most of people are going to put it in the stock market, or at least like a good chunk of people are going to put that money into the stock market, including me. So is there a chance that we're going to see a 40-50% stock market crash? Yes, there's always a chance. There's a chance that market could go down 60-70%. Do I see a 50% crash again? It's really hard for me to see it, even though the market looks in a bubble situation, but even if it happens, I do not see it happening anytime soon because another stimulus package is coming again. If it happens, maybe down the road, a year or two from now, we could see a big crash. But right now, I think even if something happens, it would be 20 to 30%, not more than that. The second thing that we're going to talk about is that how much cash should you have if you think there's a 20 or 30% correction or crash coming in front of you. And the answer to that really differs based on your strategy of investing. There are people who say you should have 70, 80 to 90% cash. Some people sell everything if they think they're going to correction, which if they can time it, it's pretty good, but it's hard to time the market. Other people are close to 10 to 20, 25%. But me personally, I think 30 to 40% should be a good amount to go into a correction. If you think there's a correction coming, 30 to 40%. It could be anywhere from like 20 to 40. So that range is, I think, a good range to have. But if you're like high probabilities of a correction coming, 20, 30% correction, I would go to like 40. But if you're not sure about it, maybe keep it close to 20, 25%. And the reason for that is that 40%, 30 to 40 or 20 to 40% is a really good range because you'll have enough money to deploy or plow into the market if the market goes down, and you can get advantage of deals. But also on the other side, if it doesn't go down that huge, you're not out of the market and you're not missing on the gains that you would have missed if you're out, if you're cash like 70, 80 or 90%. And the last thing I want to mention in this video is that do not wait for the bottom. I think I've lost a lot of money waiting for the bottom. I've been in the market for about 4 years now, and there have been a bunch of like low corrections that happened, maybe 3 or 4 major ones. And then the biggest one was the crash that happened in March of last year for me. It was like about, I don't know, 40% crash or something. As you can see, this account was supposed to get started in March when the market was at bottom, but I did not start investing until like April or beginning of May. This account could have been close to 45,000 if I started in March, but it was a really scary time because you don't know what was gonna happen. The money velocity completely shut down. The economy was completely closed. People were not shopping retail or anything else. Online shopping was increasing, but retail was really bad and a lot of businesses were closed. So that was a really scary time. It was different, but every time when a correction is happening, you should try to buy in small increments through that period of crash or correction. And the reason for that is that you never know when the market will bottom. If you know that, you're a genius, and that's great, but I never know when the market will bottom. So I always start buying whenever I see a big red day. Like I bought some stocks yesterday, and the day before I bought some stocks as well. So whenever the market is down 5-6% in a day, or even 3-4%, I start putting some money in the market. So do not wait for the bottom because it's really hard to know when the market will hit the bottom. And if you can decide and you know that, that's great for you again, and you're gonna make bang. But most people don't know that. Actually, no one knows it unless you're a genius of some kind. But anyways, waiting for the bottom can cost you a lot of money, in my personal opinion, especially if you're trying to sell all your stocks or a good chunk of it, maybe over 70-60%, and then buy back when it goes down, because you have to be right twice, once when you're selling it and once when you're rebuying it, which again takes a genius to determine when the market will go down and will go up. So that's what my plans are and what I'm doing in these types of situations. I would love to hear what you guys think. Let me know if you like this video. Let me know what your plan is, what your strategy is, how much cash are you gonna have going into this crash or correction, or whatever you want to call it, or do you even think there will be a crash or correction? Let me know. I'd love to hear your opinions. With that being said, thank you very much for watching. If you like personal finance related videos, make sure to subscribe to my channel because some amazing videos are about to come your way. Once again, thank you very much, and I'll see you guys in my next video.